Welcome back to On Point. Let's get into your markets now. And it seems that the technology firms took a hit in Asia this morning as two of the biggest names in the sector posted disappointing earnings, helping to drag most markets in the region into negative territory. A below forecast reading on Chinese factory activity added to what was a downbeat mood, though a weak U.S. inflation reading expectations that Federal Reserve will keep well away from lifting interest rates anytime soon. While corporate results have broadly beaten expectations so far, nagging concerns about the outlook for the global economy are keeping investors on edge, preventing them from extending what has been a stellar start to the year for equities. In Hong Kong, the Hang Seng, that managed to fall off, unfortunately, on that front there to sit at 29,699 points, that falling 0.7%. The Shanghai Composite gaining 0.5% at close of trade, ending the day at 3,078 points. The Nikkei still closed off there for those holidays on that front. Over into the simple markets in the United States as well. The S&P 500 broke above its intraday record high on Monday. This also underscored the view that the full bull market may indeed run a little longer yet. This came after consumer spending rose in March and inflation data was benign. The Dow Jones Industrial Average took up 10 points, and that's to close out the day at 26,554. And the S&P 500 gained 0.1% to end trading at 2,943 points. The Nasdaq Composite 0.2% better, 8,161 points. So global growth continues to be the story across the board, even if earnings out in certain segments of the market continue to shape and change how things fare in certain regards. But the market, as you can tell, just across Europe has been quite a mixed bag. Only the DAX going up today. And even on the local front, things don't necessarily feel like they're headed in any particular direction. Of course, it is May Day tomorrow, so perhaps volumes seemingly a little less than usual. So you have the derivatives market even locally only trading from 12 o'clock or so. So a bit of a mixed picture on this front. And if you continue to take a look at how things have fared, even on the local market, the JSE itself, as you can see, the all share only marginally down thus far. So don't look at that and think that it's gone down too much, but it is still well below that 59,000 point mark. We had hoped to test that 60,000 point mark. We're not getting there, but the industrials certainly pushing a little bit higher on that front with the financials and those banking stocks, which were the big gainers yesterday, around 0.5% or so, seemingly continuing to unfortunately not make a stand today, and that has fallen off by the wayside. The resource counters, as you can see, all of these going down heavily. Yesterday was a similar point of view for them. So the mining companies, unfortunately, not able to take advantage of a weakness in South Africa's currency as well. And as you can tell there, that being hurt quite significantly. Over to the commodities front as well, then you'll see that these have headed ever slightly higher. And yes, it may be a good mark for platinum and gold, but we would certainly love that oil price to continue going lower. That having set at around $71.75 a barrel odd earlier today. That has come off its weakest spot, so it is slightly better now, just below that $73 per barrel mark. And even on the currency front then, taking a look at how things have fared, the South African currency doing a little bit better from that 14.37 mark against the US dollar. It's 18.60 against that British pound, and still firmly above that 16 rand mark against the euro. So let's unpack things now and go to exactly what has changed markets. What has actually made it move the way it has thus far? Sean Morrison from IG joins us now from the Johannesburg Stock Exchange. Sean, thank you so much for the time. A little bit down today on the JSE, muted if you want to call it that, 0.1%. A little bit of earnings news out of the United States, but it doesn't feel like there's much to push the markets. Is it just the May Day reprieve?
Yeah, I think that's exactly it. You summed it up quite nicely. Low volumes coming through in the market. If you look at today's market movements, before I came here, we're in marginal gains. Now we're in marginal losses on the all-share index. One thing it is for certain, though, you do see our resource index leading decline or underperforming the market today. And that's, I think twofold. We've got the Chinese data, manufacturing, and the services data coming in slightly worse than expected, although still pointing at industry expansion. And then, yeah, we had a sort of a relatively poor trading statement out from Glencore.
Yeah, taking a look at that Glencore trading statement, then would you be perhaps sure that Glencore itself can perhaps pick things up at a later stage? They've faced quite a few headwinds, and it does continue to seem like they're headed in the same direction. Can they turn things around?
Yeah, so I mean, today we're seeing that production has been copper production, which is obviously their major commodity. Is down. They've been negatively impacted by that inclement weather in Australia. We had the cyclones there, flooding. And so the outlook for the year is not looking too great. But I think there's also, a little bit further than that. There's a bit of sort of corporate governance issues relating to Glencore at the moment. They've the US regulators now investigating them. News came out on Friday about operations in Congo and incorrect reporting practices. So there's a bit of a corporate governance, and it's being exacerbated today by a relatively weak outlook from a major copper producer.
Yeah. Okay. Let's talk commodities now. Let's go to that oil picture. Of course, the United States have keenly wanted to step in, perhaps, and even OPEC trying to add on and pile on some of that production drought that we may be having right now. Is that going to really push the price as low as 70, if not lower, perhaps, and see it trading within a range of $65 to $70 a barrel?
Jeez, we really love it too. It's kind of a double-edged sword at the moment. We've had US sanctions, limiting production and exports from countries like Venezuela and Iran, and we know at the moment they've just sort of increased those sanctions on the waivers on other countries that are importing oil from Iran, the likes of China and Turkey. And then you have Russia coming out saying that they're going to be increasing production. So I think oil price is going to remain volatile in the near term, leading into June's OPEC meeting. I think here between $70 and $75 a barrel on Brent seems to be a range. I'd like to see it, just start to move below that $70 a barrel level to start target. Then we can talk about a $65 to $70 barrel range on that oil price. But I'd like to see it lower. Obviously, you feel it in your pocket at home.
No, of course, we certainly do. And you're just about to get that petrol price knock as well then. Just quickly on the Rand as well, 14 Rand 29, 14.30 against the US dollar. Does it get any stronger from here? And of course, the Fed minutes, the Fed's meeting, which starts today, is one to look out for. And that will set precedent, perhaps, on where the Rand goes from here.
Yeah, I don't think we're expecting too many surprises in the Fed, rates announcements. They've guided they're going to be patient. The Rand is, we are coming to election time. I've actually been quite surprised at the amount of strength we've seen in the Rand. Obviously following on from that Moody's decision not to downgrade or even lower the outlook for our local currency. What seems to happen around election times is you do see a bit of weakness in your currency leading into the elections, then post that election, some return to strength. Certainly for further strength in the Rand, we want to see some policy certainty coming out of those elections, and I think that'll be good for the Rand.
Yeah.
But at the moment, I think range bound, sitting between, it's a fairly broad range in the near term, 13 Rand 75 to the dollar to about 14 Rand 60, and we're just kind of coming off the top end of that range right now. So yeah, I think fair value for where we are right now ahead of elections.
All right. Well, Sean, appreciate your time this afternoon there, taking a look at that market picture for us. As you noted, that Rand, the JSE rather, topsy-turvy, now sitting around 0.05% down, so only marginal. But we do appreciate your time there. That is, of course, Sean Morrison, who is from IG South Africa. They're unpacking that market picture for us. Let's continue to track things a little bit here, and hopefully we'll get the currency board up as well on this side, and we'll just unpack things a little bit on this front. Now, South Africa's currency, of course, is one of the main reasons why you'll get whether it be a weakened situation with regards to the petrol price or perhaps a strengthening in it. And as you can see, it has gotten slightly better at 14 Rand 30, but so too has the oil price, and that's sitting at around $72.90. And when the decision was made to hike petrol price by around 54 cents a litre, that had seen the oil price closer to $75 a barrel. So the hope now is that we'll see the oil price continue to head in a lower direction, as Sean said, to around $70 a barrel, if not lower. And hopefully that currency will edge much closer to 14 Rand against the US dollar. We buy the oil in dollars, which means that we'd have to translate the South African currency first into dollars and then buy oil in those dollars, which is why both the currency and the price of oil are quite significant. We'll continue to see how things fare, and we'll watch out for that. We're going to give you a growth story, though. How did South Africa look back in 1994 when it comes to growth, when it comes to inflation, even when it comes to that Rand story? We'll unpack that for you here on Market Sense. Do stay tuned. This is On Point.